Hey everyone, welcome back to Corporate Decoder. Today, Calidi Biotherapeutics Incorporated CLDI just filed an 8K talking about a reverse stock split, and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This reverse split is a clear attempt to boost the stock price, but the reason behind it might tell a bigger story. Alright, so what we have here is a Form 8K filed by Calidi Biotherapeutics Incorporated. This is basically a report of significant events that a company needs to tell its investors about right away. The earliest event they are reporting here happened on the 27th of July, 2026. The company is Calidi Biotherapeutics Incorporated. They are incorporated in Delaware, which is pretty standard for many US companies. The main event here is a material modification to the rights of their security holders. What does that mean in plain English? It means they are changing something fundamental about how their stock works. They executed a reverse stock split. This is a big deal. Essentially, for every 16 shares of common stock an investor owned, they now own just one. So if you had 160 shares, you now have 10. Now, why would a company do this? The filing says it is a proactive measure intended to increase the per share trading price, support the continued listing of its common stock on the NYSE American, and reduce the risk that its common stock could become subject to delisting for failure to satisfy applicable continued listing standards. Basically, their stock price had likely fallen too low to meet the stock exchange's minimum price requirements. Think of it like this. If a stock price drops too low, the exchange can kick it off. A reverse split artificially inflates the per share price to avoid that. Historically, about half of microcap companies that do reverse splits end up delisted anyway. For instance, when Kodak did a 1-for-20 reverse split in 2021, holders saw roughly a 40% additional drawdown over the following 90 days. A $1,000 position there became about $600. The reverse split officially became effective on the 30th of July, 2026. So starting the 31st of July 2026, the stock started trading at its new higher per share price under the same ticker symbol, CLDI. They also mentioned how they handled fractional shares. If the split resulted in someone owning a fraction of a share, like 0.5 of a share, they rounded that up to the nearest whole share. This means no one got cash for tiny fractions of stock. And it explicitly states that no fractional shares were issued and no cash was paid for them. Looking at their capitalization, they are authorized to issue a lot of shares. 330 million shares in total, with 312 million designated as voting common stock and 18 million as non-voting common stock. After the reverse split, they had about 2.4 million shares of common stock and a small amount of non-voting common stock outstanding. This is after the 1-for-16 reduction. What is important to understand is that while the number of shares changes and the price per share changes, your percentage ownership in the company generally stays the same, unless you had those fractional shares that were rounded up. This section basically confirms that the reverse stock split is also reflected in their official company bylaws. And here we have the exhibits, which are essentially the supporting documents for this filing. Exhibit 3.1 is the actual form of the certificate of amendment that was filed with the state of Delaware to make this reverse stock split official. Finally, we have the signature section confirming that the company officially made this filing. Scroll Calidi Biotherapeutics Inc. dated the 31st of July 2026 by Sobin Andrew Jackson name, Andrew Jackson title, Chief Financial Officer scroll. This is signed by Andrew Jackson, the Chief Financial Officer on the 31st of July 2026. Now, let's talk about what this all means. A reverse stock split is often seen as a sign of weakness. It is a tool to stay listed on an exchange, but it doesn't fix the underlying business issues that cause the stock price to fall in the first place. The company states the reason is to meet listing standards. But the real question is whether the business itself is healthy enough to sustain a higher stock price. Looking at the context, there isn't a lot of recent financial data readily available in this filing to do a deep dive, but the need for this action signals that the company may be struggling. Companies that are growing and performing well typically don't need to resort to reverse splits. The risk I'm watching is whether this is just a temporary fix or if Calidi Biotherapeutics Incorporated has a plan to actually improve its business fundamentals. What I'm actually looking for is any future filings that show improved operational performance and revenue growth. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.